Jill Malandrino, Global Markets Reporter at Nasdaq. Joining us, we have Jay Gragnani, Head of Research and Client Engagement at Nasdaq Dorsey Wright, to discuss the top performing factor in 2021 and his outlook for 2022. Jay, it's great to see you as always. Welcome back to Trade Talks.
Jill, great to be here.
All right, and we're talking about factors, talking about asset classes and so forth, and I think we'll be able to guess which one was number one for 2021, but you let us in on that secret.
Yeah, it's not too surprising. I mean, 2021 was certainly a year of equity dominance, and really there was a broad rally that we saw participate in the market, and very different than what we saw in 2020. I mean, 2021, you look at, depending on the day, but right about now, the S&P 500 is up about 25% on the year. And when you look across the board, you see a lot of strength continuing within U.S. equities. The S&P 500 has notched the gains that it has had this year, and has done so with relatively low volatility. I mean, you have to go back until March of 2020 since the last time we actually saw a 10% pullback in the market. On average, that happens about once a year. So we didn't see that happen at all in 2021, and the market just continually plodded along higher. Now, there were certain areas that did correct 10%, some sectors did, but when you just look at the S&P 500, and so as we're standing here today, mid-December, headed into 2022, which is hard to believe, that we're doing so with U.S. equities as it relates to its asset class relative strength is in the number one position. So U.S. equities is the top ranked asset class when we look out at our asset class rankings. And again, I mentioned the breadth of the rally, the broad rally that we've seen. Not only are the overall trends of the market indices still positive, but we continue to see a vast majority of individual stocks still in positive trends. As a matter of fact, if you look at the S&P 500 itself, you still see north of 70%, about 74% of all stocks are in positive trends today. That is historically a very positive sign for the market. As long as those readings stay above 50%, those will continue to be seen as positive signs for the market.
And Jay, as we go into 2022, I would imagine that sectors are really going to be key here when you think of what areas to watch. And we're starting to see that rotation in earnest over the past couple of months.
You certainly have been, and at the beginning of 21, you saw some rotation certainly happening as technology and growth stocks kind of took a breather a little bit, but they've seen a resurgence come back here over the course of the year, as has energy. Energy is really the one sector that has led the charge. But certainly if you look just historically, sectors in general can be extremely important for investors. On average, you get about 38% difference between the best and the worst performing sector every single year. And so that's a big dispersion. Like I said, this year, energy is right there at the top of the pack. From a ranking perspective, you've seen now 4 sectors with 30% gains or more. But you've seen all sectors, going back to the idea of just the broad rally, they've seen all sectors, at least through yesterday, have notched a double-digit return for the year, including staples and utilities, which are down towards the bottom of the sector rankings. But you've seen this broad rally right now as we're heading into 2022. Technology and energy are 2 sectors that are right there in the top 4 of the sector rankings when we look at those. So technology and energy, certainly 2 sectors that we're paying very, very close attention to now. And then you also see consumer cyclicals or consumer discretionary is up there. And rounding out the top 4 there are financials, and you've seen financials, and really you could throw real estate in there too, but financials and real estate certainly have benefited here recently, but there's still a lot of uncertainty as we're heading into 2022 as it relates to interest rates and inflation, and so there's certainly that uncertainty is not going away, and it's just going to be something different maybe. We'll continue to move and see what happens with the Fed decisions and interest rates, but certainly it looks like inflation is here, and if you start to see interest rates rise, certainly financials is a place that historically has benefited from that.
And what are your thoughts around non-U.S. equities and the commodity space in particular, because we are still managing a U.S. dollar that has been quite strong?
It has been, and that's, again, very different than what we saw in 2020. The U.S. dollar so far this year is up about 7%, which is a big move for a currency, for the U.S. dollar. But typically, historically, what you see when you have a strong dollar for non-U.S. equities, that creates a pretty massive headwind. And that's exactly what we've seen, especially with as it relates to emerging markets this year, with China right there at the top of that. We saw a lot of those emerging market indexes peak early on in the year back in February, and they have since pulled back as the dollar has strengthened. Developed are still showing showing positive gains on the year, although the developed world has seemingly stalled out as well. So, historically, when you get this environment where there's a strong U.S. dollar, that tends to be a negative sign for non-U.S. equities. You mentioned commodities. Commodities has been interesting. That's really been an area that's kind of bucked that trend where, a strong dollar is typically not a great thing for commodities, but you continue to see commodities, crude oil right there at the top of the list, show strength going into December of this year. And as we head into 2022, you certainly see some continued strength there within commodities. We'll see if that trend of strength within some of these commodities while the dollar continues to rise. We'll see if that continues to play out. But right now, seemingly the commodity world, ex precious metals, gold has struggled a bit, which has been interesting. But the commodity market, as it relates to its asset class strength, is number 2 as we head into next year, right behind U.S. equities. So U.S. equities and commodities are the number 1 and 2 ranked asset classes heading into the new year.
All right, Jay, we appreciate the insight. Thanks for joining us on Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.